Entering a trade, part 2. Alright, if profit potential is limited and you decide to trade anyway, then you are increasing the chances of a loss for no good reason. Right? This will manipulate your data in a negative way, and unnecessary losses eat at your precious mental and financial capital. The other way I will enter a trade is with momentum, through a counter trendline break. At that point, we have visual evidence that momentum has shifted in our favor, but the trade-off here is that a delayed entry will usually stretch our stop placement, increasing our risk. So this is a dilemma, and listen closely as to why. So anytime you trade location for information, there is almost always a cost associated, and it is up to you if those costs are worth the extra risk. I generally like to target important areas when I am entering full size, and will mainly use a trendline trigger like the one above that I mentioned above when adding back into an already established position. Or let's say you've already you're looking at the charts and you can see that a trade has already triggered, right? It's already in the middle of a trade, or the market is moving in a way that you would have, if you were there earlier, you would have already gotten in, right? So it's just like, it's like a delayed entry, right? So at that point, you can use a trigger like this to enter in at potentially maybe a smaller amount, right? So that you can still catch part of the trade, right? Because if it's a trend that you're trading, right, you never know how long it's going to last, but you could see maybe, right, we looked at the ADR and we saw that the range was 80 points and we're trending, but it's only gone 40 points, right? At that point, we know that there's still opportunity. Not, it doesn't guarantee that it's going to go to 80. It may only go to 60, but at that point, it could still pad your pockets with a little bit of cash with kind of a quick hit if the risk reward makes sense, right? You're getting in late. You say, the next resistance level is pretty far away. Range says that I've still got room to go or run in the market. Something like that is something that I would consider taking, kind of like a late trade with smaller risk, but still positive risk reward, if that makes sense. So our mindset after we enter, right? And this is huge. So listen up. Now that we are in, price can only go one of two directions, right? If you are new to this, then this is going to take some time to develop an intuition here. But most importantly, from this point forward, I recommend starting small and just learning to be in the trade. No expectations, no emotions, right? Price goes up, it's great. Price goes down, no sweat. We have to break the emotional tie to our risk, right? Make sure the amount is small. And if you feel yourself getting anxious or nervous, then, either close it out and start again with a smaller amount, or just sell off a little bit of it, right? I must reemphasize this again. So many psychological issues in trading can be solved by risking less money. Maybe your hesitancy to enter has nothing to do with some deep-rooted issue, but everything to do with risking too much money that you're mentally capable of potentially losing, right? Just a thought. So you can also minimize or put tape over the P&L, the profit and loss area of your screen. So you just be in the trade, right? You're not thinking about or you're not thinking about the money. You're just objectively watching the market as best you can, right? This is the first step to objectively reading the price action that is currently happening. Start with 15 minutes, then 30, and shoot for an hour if the trade calls for it. We can usually read things very objectively until money is on the line. But once you have skin in the game, an unhealthy directional bias often sets in, not allowing us to read things as they are, and we must constantly work at being objective while having an objective, right? If that makes sense, right? It's tricky, so I'm gonna say that again, right? We must constantly work at being objective, right? Which means having an open mind about what could potentially happen while having an objective, while having a specific task or goal that we are looking forward to happen. Right? So I'm just going to kind of review this again because I think this is so critical. It's so important. And this is really, really worth doing this exercise. And not only that, but again, I'm going to reemphasize the psychological things. I don't remember who said it, whether it was Mark Douglas or one of the other guys who specifically do a lot of the trading psychology work. But when you have too much money on the line, right? Things just go haywire. right? Everything logical is thrown out of the equation. You know, when price goes up, you're like on the edge of your seat because you're anxious about the fact that you're making money, but you're excited and your greed is going through the roof, right? And all this, and then when it's going down, you know, it's like depressed mode. It's like, oh my gosh, I just need it to go back up. Like, you're wishing, you're hoping, you're yelling at the screen, you know, those things again have no place in trading. And so you can say, you know, maybe you took 2 big losses in a row and now you're like hesitating to get back in. Well, that has nothing to do with discipline, and that has everything to do with the fact that you're trading too big, losing too much money, and now you're fearful that that trend will continue. And more than likely in that environment, and that time frame, and the way that you've kind of situated yourself, you are going to self-sabotage yourself, because when price goes up a little bit, you're just going to want to get out to say, to get rid of the emotion and feel relief, right? To feel like, okay, cool, I can count that as a win, and I put some money in my pocket, even though that could have been a trade that made your month, you know, or your year. You weren't even able to take even a little bit of advantage of it because you're completely screwing yourself on the back end, right? So this is the point. This is exactly the reason why I recommend to trade small, trade appropriately, and if you follow all the big guys, that's exactly what they're doing. They're not doing oversized. Now, there's a difference between doing what I just mentioned and also having a trade that you're already in that's already making a lot of money, and now you're pushing that trade and you're adding more leverage to that to try to push for big gains, right? That's completely different. That's a, you know, an advanced tactic, and it's something that you can use to increase your return, right? But again, that's different. It's strategic, right? As compared to this, which is just a bad habit, right? So let's get rid of the things that could cause the bad habits first, and then we'll worry about ramping up. Once we're emotionally stable, we're trading well, we're profitable, then we'll worry about ramping things up to get a bigger return. All right, so the counter trendline break example. So having an entry trigger such as this allows us to establish a well-defined risk reward before we enter, right? So like I mentioned, you know, maybe you got into the market and it was like here, right? Let's say you're day trading, coming to the market, like, all right, cool. So price has been trending. It's looked pretty good. It's established a nice smooth trend line, you know, very, very low angle. So you can see, okay, nothing's really overheated here. I don't have this trend line drawn in, this kind of accelerated trend line drawn in here, but that's okay, right? Again, just one acceleration. Again, at that point, we're looking for the market to potentially come back closer to the trend line to get a good entry, right? So in this example here, we're using a counter trend line as an entry trigger, right? So what do we see? We see price break the highs here, fail at those highs, break down, and you can tell right about here that the trend line is broken. Okay, so we expect a deeper trend, or we expect a deeper pullback, potentially back to the trend line. And instead of it pulling back, so I want you to notice this, instead of it pulling back to the trend line, right, it consolidates. It goes, nope, we found the previous, which this is the main previous support level, right? Found this level, broke the trend line, came back to support, and consolidated here, and then broke out higher, right? So at this point, we can look at a couple things. The trend still seems to be healthy, right? It did not give us a significant pullback. This is a very, very light pullback, showing that this is probably just profit taking, right? It wasn't even able to get back to the trend line before it broke higher, right? So we look at this area here and we go, okay, all right, this is our resistance level price. This is our support price. So we could say, all right, our first target could be this high here to take a little bit of risk off the table, or we could let it hit that and just see what happens, right? Maybe take some money, or if it comes back down here, we could go ahead and take a piece of this back to break even, or get out around our entry for part of the trade, just to reduce our risk in case in case the trade fails, right? Or we can leave it open in case the market continues to break out, and our stop could be, at this point, could be just below this level, or we could expect for price to pull back at that point to the trend line and wait to see what happens around here, or get an entry at this point here. But at this point, this obviously ended up being a very successful trade. Now, we never know exactly what's going to happen on the other side of it. But again, this was a massive risk reward based on any of those factors, right? And depending on our range for the day. All right, so just to go over that one more time, just do a little quick review. The counter trend line and the situation like this, this actually has enough attributes to where this could be a full-size trade, so that maybe this wasn't the best example of just getting in for a little entry trigger. Maybe that would be something like this guy here. If we have a trend line here, and you have kind of a bull flag here, this could be kind of a late entry. This almost has more of a setup of a full-size entry. But regardless, the attributes and the I think the explanation and the example is valid. That it's like, hey, even if we had started back down here and we got in on time and we had been trading this, right, and we had taken some profit along the way, this would be a great place to add back into our trade, add risk back on the table, and make money and put money back in our pocket.